Welcome to Finscale, a podcast created by Solène Niederkorn, shedding light on innovation in finance, banking, and insurance.
From scaling in payments to IPOs, Josh Kaplan, partner at Wilson Sonsini.
So the main issue we were facing was, frankly, how to do that at a very high cadence. And
yes, because it went very, very fast. That's what strikes me with checkout.
Yes.
Is the rapidity.
Yes, that was intentional. Once you had that technology stack in place, you had this opportunity to very quickly scale it. And so the question was, what would be the best way to organize my function to scale at a high cadence?
A conversation that covers many topics, from scaling a business in payments to Twitter and the timing of IPOs. In this episode, I speak to Josh, a banking lawyer who worked at the US Federal Reserve, Deutsche Bank, Crédit Agricole, and Bank of America before joining the FinTech world at Checkout.com, the payment processing company. Josh takes us through the macro and micro steps Checkout.com took to prepare for their international expansion when he was COO. He uses Saudi Arabia as an example, providing insight into how the team was assembled, core functions established, and the local teams deployed. We look at the benefits of deploying from Europe, where a standard of excellence is established in the key areas of anti-money laundering and data protection. We learn that data has always been key to their scaling and get a first-hand look at how it's processed to be very efficient at resolving bottlenecks very fast. We also dive into their regulatory strategy for expanding outside of Europe. Josh joined Wilson Sonsini, a tech-focused US law firm, a few years ago, and we learn about their relationships with big tech companies like Netflix and Apple. Discovering a startup history from its formation as a legal entity to more complex litigation cases is a special treat. You'll also learn about the key roles that these top-notch advisors play. If you want the inside scoop on IPOs, we pinpoint the exact timing required to make it a success. Enjoy listening! Hi everyone. Hi Josh.
Hi Solène.
Good to meet you in Luxembourg.
Good to see you.
Before your flight, so we have 35 minutes because you need to take a flight in 35 minutes, more or less.
Exactly. Yeah.
Can you please first present yourself to the audience?
So I'm Josh Kaplan. I'm a partner at Wilson Sonsini in the corporate practice. I'm part of leading the FinTech practice within Wilson Sonsini, working with FinTechs across Europe and frankly across the world.
And prior to that, you were?
And prior to that,
an operator.
I was an operator. So we've sort of differentiated our practice by having an operator in the practice group. So I was the chief operating officer of a FinTech called Checkout.com, which went from being a relatively small FinTech at the time I joined to being a global FinTech with over 1,000 employees.
Excellent. Thank you very much. So I must admit to the audience that I already invited you 18 months ago, or 1 year ago in Paris. I don't know if you remember. During a party, you were talking about the expansion of Checkout when you were COO. Right. I found it very, very interesting. And I said to myself, I absolutely need to have Josh on my podcast to discuss this and many other things. This is something I wanted that you explain to us before we deep dive into Wilson Sonsini and the way your law firm is supporting its clients. I wanted to do a sort of brain-picking session with you, and that we understand through this testimony the way you as CEO perform the expansion of such an amazing FinTech that is Checkout across 5 continents, if I'm correct.
That's right. Yeah.
Can you please explain to us, when you joined Checkout, what were the main issues that you were facing as a CEO of a payment company? Let's start with that.
So at the time I joined, the company had been around for a little while, but it had just completed its tech development such that it had a sort of full stack solution, meaning that the company controlled and owned each part of the value chain. So the gateway, which is sort of the front end, it was a principal member of Visa and MasterCard, which meant that it had a direct membership with the card networks, and then the back end, which was the technical connectivity with the card networks. The opportunity, as I saw it, was to create a global platform that would allow global e-commerce merchants to have a single technical integration with the platform and ultimately a single legal integration with the platform, meaning that there was a single merchant services agreement. So the opportunity was to build out that global platform. And given that at that point in the company's history, they had completed the tech stack, it was the right moment to do that, because expanding it into these 4 other continents was simply a matter of establishing a legal entity, getting the appropriate license, regulatory license, and establishing the membership in the local scheme. But otherwise, you could leverage this single tech stack in each of those markets because Visa and MasterCard are the same. It's the same technology regardless of which market you're in. So the main issue we were facing was, frankly, how to do that at a very high cadence. And
yes, because it went very, very fast. That's what strikes me with checkout.
Yes.
Is the rapidity.
Yes, that was intentional. Once you had that technology stack in place, you had this opportunity to very quickly scale it. And so the question was, what would be the best way to organize my function to scale at a high cadence? So I was very deliberate about thinking about which teams needed to be part of the COO function. And it ended up being legal, risk, operations, of course, compliance, and financial partnerships, which was the small team that managed the relationship with the payment methods.
So you built the team. You decided which functions were part of the team. How many people were you at that time?
I mean, when I first...
You were doing compliance, legal, operations at the same time?
Exactly. That was, then that's, of course, part of scaling a technology company, is that there's always that period of time where you wear many, many hats, and that's part of the sort of the growing pains of a company. But initially, when I came into the company, there was maybe one person working with me. By the end, there was probably closer to 120. But it was both about choosing the functions and then over time growing the staff within those functions.
And how did you launch one country? How does it happen? And why did you decide to go in that country? Do it country by country?
Yeah. So, Europe is really the only place where you can think about a region as opposed to a country. And it's one of the great advantages of Europe, right, is the passporting right. But I think there were really 2 ways you would select a new geography. One would be a sort of a macro analysis, and that could be things like, to give a concrete example, in Saudi Arabia, the Crown Prince had been very public about his desire to eliminate cash, is a desire to increase digital commerce. Those were 2 policy initiatives that were clearly going to be beneficial to a company that provides digital payment acquiring, right? So there could be a macro analysis that would lead one to choose a particular jurisdiction. You would also look at things like, of course, things like GDP, but you'd also look at penetration of smartphones, penetration of internet. And then at a more micro level, you might have a particular client, a large client who says, I'm going into this new country. I would like you to accompany me in this country. And then that becomes a sort of an anchor client that can then create the business case for making the investment and entering that new market. In terms of how we entered these markets and how we sort of iterated over time to figure out how to do it efficiently, that was something that, there again, was very intentional, and it was part of what drove the decision around which teams would form the COO function, the COO division. So you needed, when you went into a new market, you needed to create a legal entity, so the legal team would be involved in that. You needed to think about what were the local fraud and risk and AML requirements, and so you would get compliance and risk to look at those things. So
every time you create a new team, or you involve your current team mixed with a new team?
Yeah, no, so that's a great question, because scaling rapidly, it was critical to take a very data-driven center of excellence approach. So we actually kept everything very central. And there was very little that was local. So principally, the local hiring would principally be on the sales side rather than on the control function. The control functions were kept in
the headquarters,
very tightly centrally located, and we had these real centers of excellence within the COO function, and those centers of excellence were really driven by data. So we put in place these tools for monitoring performance at a very granular level that enabled us to understand where there were bottlenecks in our processes and either automate or increase headcount or make adjustments to resolve those bottlenecks. But the advantage we had in taking this very centralized approach to the global expansion was that we were coming from Europe. And so you had two pieces of legislation that you could use as sort of gold standards for everything you did across the globe. And that was the GDPR and the Anti-Money Laundering Directive.
Okay.
Right? So you could really design your core processes and your core systems.
You mean it was the excellence? That's what you mean?
Exactly. No, but Europe really has set a standard.
Yeah.
And what that meant was that while we might be doing more than was necessary in certain markets, at least we had consistency, and that then drove the ability to scale at speed.
So when you're scaling in Europe, it's okay because you have free provision of services, but when you go in foreign countries such as Australia, as you did,
yes,
the US, how does it happen?
Right. So in these other markets, you don't have this passporting capability. So you set up a local entity. The legal team would determine what is the sort of minimum licensing that we can obtain in order to provide our service in this country. And in fact, that licensing would be tightly tied to your ability to establish a direct membership with Visa and MasterCard. Because as a condition of membership, they would want you to prove that you either had a license or that you had a legal opinion demonstrating that you did not need a license. And so those two things were very, very tightly tied together. But yeah, in each new market we went into, we were actually establishing a separate legal entity, separate license, separate direct membership with the card networks. But we were still able to leverage these centers of excellence. We're still able to leverage these central teams for purposes of the controls and the onboarding and so forth. Impressive.
Congrats. So after a few years, you decided to leave. What was the trigger of going back to law practice? Because you started as a lawyer in the beginning of your career at the U.S. Federal Reserve. Is it correct if I remember what you told me?
That's correct. Yeah. I started my career at the Fed. At the time, Alan Greenspan was still chairman, and I worked in the Fed has the three functions, as you know, and the most well-known function, of course, is monetary policy. Then there's bank supervision, and then there's payments, right? And I actually worked on monetary policy and payments. So I started working in payments back in 2002 at the Fed, and the Fed is the biggest payments company in the world. They process, I think, roughly $3 trillion a day.
Wow!
And so yes, I started there as a lawyer, and spent a good deal of my career as a lawyer. So going back to the law wasn't that much of a stretch. But for me, what was really interesting about the opportunity of going to Wilson Sonsini was the opportunity of creating a differentiated practice. So a practice that would really draw on the operating experience that I had developed during the time at Checkout, expanding that business globally. And I think
that makes a big difference, to be honest.
Because
I don't know any lawyer I've been in contact with since the beginning of my career who has been an operator in a FinTech or...
Yeah, no, it is unusual, and what we found, more importantly, what we found is that the clients really place a significant value on that expertise, and some of the clients actually are more interested in that operating experience and learning from that experience than they are in the regulatory advice or the corporate advice, right? But ultimately, Wilson Sonsini is a great platform for taking that type of approach. It's an approach that's consistent with what we sort of refer to as our Silicon Valley style of practice. And so, this was a firm that I had known by reputation from the time that I was in law school. I had worked with them as a client because they.
So you tested them.
They were the advisors to Checkout on all of Checkout's financings, and so I had great relationships at the firm. I knew it would be a wonderful place to work with talented people, and so that was what, and then also switching from an operating role to an advisory role means that you get to work with a much broader range of institutions. I continue to work across a broad range of geographies, and I continue to work across a range of stages, right? So early stage companies, growth stage companies, and also listed companies.
Okay, excellent. Could you please present Wilson Sonsini a few minutes, the areas of expertise, track record, clients, so we have an idea?
Sure. So Wilson Sonsini is a Palo Alto, Silicon Valley-based firm. We only work with technology companies. We don't work with any other type of company. It's a full-service law firm, so over 1,000 lawyers across every area of expertise, from disputes to corporate work to more specialized practice areas, tax and employment law. And it's a firm that that has basically been through all of the cycles of Silicon Valley, starting in the 1960s through the dot-com era. And I think, it probably really cemented its reputation through its corporate work, in particular its capital markets practice, bringing a number of very well-known technology companies to the public markets. But today it's really a full-service firm with outstanding practice groups in a range of disciplines.
You didn't drop a few names. You didn't drop any name of your clients, despite the fact that some of them are officially on your website.
No, I mean, it is out.
You're a real lawyer. Huh?
It is out there. I'm less comfortable doing that, but it's true that it is public knowledge. The companies ranging from Apple to Google to Netflix, to Tesla, to Twitter. So Twitter, I think that's very public that we were advising Twitter in connection with its sale to Elon Musk. But, the important point is that the firm has deep experience advising across a range of subject matter areas in tech for decades.
And you mentioned different stages: startup, VC, IPO, an early public company, and a multi-billion-dollar public company. What are the needs for? It's very complicated, I guess, but what are the kind of needs you have for those three different stages?
So we refer to it as our 3 circles practice. So the first circle are emerging companies, the second circle are growth companies, and the third circle are public companies. And the firm has been purpose-built to advise multiple stages. And what that means ultimately is that we're able to be with a company from inception through to its liquidity event, which could be a strategic sale or could be an IPO. And then once it is in the public markets, we're in a position to advise it on an ongoing basis. Probably the prime example of this is that's most often cited by my colleagues is Google, where the firm incorporated the company, helped it raise its initial financing rounds, took it public, and continues to advise it as a public company. And that process of matching the areas of expertise, matching also as much as we can the cost of the services to the stage of growth of the company enables us to build these deep long-term relationships with the companies and really be a trusted advisor to the company, which is ultimately the role we most treasure.
And for a seed company, it's very basic, huh? But if you can answer, for an early stage company, the main use of a law firm would be what?
When you're a very early stage company, you just need help getting that initial financing so that you can build. Once you become a growth stage company, you need to start thinking more carefully about legal risks, and you might use attorneys from our data protection practice. You might use attorneys from our national security practice. You might use our technology transactions group to help refine your terms of service, your complex licensing agreements. And so, as the company grows, as the complexity of its operations grow, it will start to have greater need for more of the specialized practice areas. And FinTech is a great example of that, because FinTech companies, what really distinguishes them from traditional tech companies is that so many aspects of their business are subject to some form of regulation or supervision, right? Everything from the type of customers they do business with, how they onboard the customer, how they treat the data of the customer, what the composition of their balance sheet looks like. Mm-hmm. Do they hold regulatory capital or not? How they conduct M&A activity. So a change. If it's a licensed institution, there might be change in control restrictions. So every aspect, and then there's of course the product as well. Depending on the type of product, that's going to have regulatory constraints on it. So what we find is that with the FinTech businesses, as they grow, their need for more specialized advice also grows, and that's where those other areas within Wilson Sonsini come in. And then I'd say, as a public company, I think the big ticket item that you see as a public company that you maybe see less of as an earlier stage company is litigation. Right?
I can imagine. Okay, thank you very much. So now we know clearly the value proposition that you have at Wilson Sonsini. Would be interesting to have also your insights about the IPO, because you have many tech companies at NASDAQ listed on the NASDAQ. And I was wondering what kind of tech companies are concerned by an IPO and what the perfect timing, because there is a timing to go for listing.
Yeah, so right now we're obviously at a bad time. The markets have been mostly closed to IPOs this year. In terms of so there's the market timing aspect, which of course no company can control, but then there's the company timing piece, which you can control, right? And I think there's some people will have the view that you can either be early or you can be late. But being in the middle is often not great. So being early, and going to the market early, you can tell you can potentially tell a very nice story about the potential for growth, and if your market timing is correct, the market can be very receptive to that story. Going public late. When
late, I wouldn't think that. Well, why?
Because one of the things that the market tends to really reward, public markets tend to reward, is consistent, visible earnings ability. So late can be when the company's mature, when it's established good recurring revenue streams with a nice track record. That can be very comforting to the market, and that can be rewarded in terms of the valuation. So I think for some people that there's sort of you're either early or you're late. Being in the middle, you can get caught in a scenario where you neither appeal to the investors that are seeking growth, nor do you appeal to the ones that are seeking stability. So I think in terms of timing, that can be important.
And do you have that kind of discussions with clients coming to you and telling you, we're ready, we want to go for it? You think that maybe there is a problem of timing?
So we certainly have these kinds of conversations. I think that the clients will mostly talk to their investment bankers about to try to get a sense of what the current appetite is for their profile of earnings. But this is the conversations we tend to have around timing are, where is the company in its preparation from a governance standpoint, from a financial reporting standpoint. Those tend to be more of the conversations that we focus on with our clients.
Josh, yeah, we have to rush a little because you have to take your plane. I wanted to finish and conclude with this. can you take 5 minutes to tell us what your thoughts are regarding the FinTech ecosystem in the UK, Europe, US? You have a great knowledge about these different ecosystems. Would be interesting.
So I think there's a few themes that we're seeing right now. One is that there may have been valuations may have gotten a little carried away last year in FinTech. And so one of the things we're seeing with the earlier stage companies is that the multiples that they may, have anticipated based on 2021 deals are just no longer there.
Okay.
So that's causing some consternation in the early stage funding space. There's another theme would be the potential demise of crypto.
Yeah.
Another theme that's very interesting at the moment is the growth of real-time payment infrastructure around the globe, frankly. In the US, we have FedNow coming online soon. In Europe, instant payments is also coming online. And then in the emerging markets, you have some great success stories like UPI in India and PixPay in Brazil. And so what does that mean for the future of payments? Another theme that we see increasingly developing is open banking, both in terms of sharing financial data, but also enabling the initiation of payments from accounts. And then I think from a sort of macro perspective, you have another sort of new theme is positive interest rates. So especially here in Europe, right, where we had a lengthy period of negative interest rates. And what will the impact of those interest rates have on FinTech? So I think the good news is that the FinTech ecosystem continues to be vibrant in the UK, EU, and the US. And frankly, in other parts of the world as well. We've been doing work in Africa, in Southeast Asia, and seen some remarkable FinTech success stories in those markets. So I think as a sector, as an ecosystem, very healthy, very vibrant. But as I said at the beginning, valuations may be correcting after an exuberant 2021.
Thank you very much, Josh. Jump in your taxi. See you soon.
Thank you, Solène.
Bye.
Bye-bye.
Thank you all for listening and sharing this moment with us. Don't hesitate to contact me on Twitter or LinkedIn to share your comments and reactions. You can also rate this episode on your favorite podcast platform. See you soon.